The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 7th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Les Show. Right now, the Dow up 223 points, trading out at 23,658. S&P's up 31 points, 2562 is the print. NASDAQ 100 up nearly, it's up 90 points. Russell's up 26, that's nearly 2%. Semis are up 2.5% or 29 points. Trannies are up 1%, that's 89 points, trading out at 93.14. So it's mean and green across the board. Spot volatility index down just slightly, off 28 cents, trading out at 21.10. Gold's up $4. Silver down 3 pennies. Light sweet crude up $1.30, give or take. It's trading out in the 49s range out there. Leading the charge to the upside, you've got Sage Therapeutics, Luxoft Holdings, Amazon. To the downside, I don't know. My screen is kind of screwed up there. I can tell you, Procter & Gamble, PG&E, I should say, is down $5 or 22%. Everything else, I'm not sure. PepsiCo's off 26 cents. No big deal out there. In any event, I do want to look at what you want to look at. But first, let's take a look at the market out here. Let's try to get our heads wrapped around, and I do mean wrapped around, what the market is doing. So there's several things for us to take a look at. Several things. First, let's take a look at what's going on as far as price and the daily equity futures contracts. So here, with regard to, that was a question from Jay inside the Tiger's Den. You want to take a look at the TAS levels on the daily. Now, we have the daily and the weekly. So, Jay, you get a bonus out here on Magnificent Monday. We take a look at the ES, the NQ, the YM, and the Russell 2000 out here. What we're going to see is right now you've got the ES Mini nudging up against the top of its weekly profile. Now, this is a profile that just formed this week. The level is 2567, 2568. The high so far today, 2566. So it's right up against resistance. So there is another level of resistance. That's the daily top of its box, 2585 out there. So that appears to be the range of where price is headed to. This could be a short-term top, could be a significant top. Maybe we've got to go investigate that too. But we do know that price is bumping right into resistance, or resistance number 1, we'll call it, because resistance number 2 is 2585. What happens if price closes above those levels? Well, that would be very bullish out there. Stevie believes it would be very bullish. In the case of the NQ, it's nowhere near resistance, meaning it has much further to go to the upside before it runs into its first level of resistance at 66.29. You're at 65.32, so that's nearly 100 points to the upside, and then you've got one at 66.89. before it runs into resistance. So it's really not going to be the NQ, or it does not appear that it's going to be the NQ that's going to give you the message that the move is over, if it is over. Red Rover, Red Rover. If we take a look at the Dow out here, the Dow is up towards the top of its daily profile. That level is 23,674. We have been up to 23,668 out there. The top of its weekly profile, 23,790. These are important levels to be watching, because if the bulls can run over the bears here, the bears, and many of you saw that game yesterday, kind of an amazing thing. But in any event, well, I guess maybe not so amazing, but wow, wow. If we take a look at what the Russell 2000 is doing, it is trading above the top of its weekly profile. Not just Monday, it's just the day out here. Nonetheless, it is pretty impressive to be trading above that resistance zone. Or this is where there should be intermediate term sellers hanging out. But maybe not hanging out. Maybe they've just decided to say, you know what, the weather's so good down there being Florida, maybe I'll just stay down there. 1422 was the top of its profile. So all levels of resistance have not been cleared just yet. But what we do have, we've got A to B equals CD patterns, maybe Gartley sell patterns that could be setting up. But we'll take things one moment at a time. Here's what you know. At 1:12 in the afternoon, the ES Mini trading up against a level of resistance. The YM trading up a level of resistance. The Russell 2000 trading up a level of resistance. This is the time to shine if the bulls are truly in control. And I got to tell you, as of 1:12 in the afternoon, the answer says, yeah, this is a move. Now, we say this is a move. We're not just talking about this is a move. We're talking about this is a powerful move that is underway. Yeah, take a look at the advanced decline information out here. You've got 2,354 net advancing issues in the New York Stock Exchange and 424 declining issues. That is strong market breadth. How strong, you ask? Well, if we go take a look at the New York Stock Exchange advanced decline oscillator reading, it's printing out at 307.69. This yellow line up here just measures 303. That's where it was printing when I went ahead and put that line out there. Let me take this back, all the way back into the 1990s out here. Look at how often, actually, let me reframe that. Look at how rare it is for market breadth in the New York Stock Exchange to get up to these levels. Can I refresh? I am fresh. I can't refresh. I don't know how to refresh out there. I don't really know what that means. I think it's up to the control room to refresh. Never mind. Okay, good. But take a look at this. We have not seen advanced decline data up at these levels very often. The last time, by the way, that we saw those was back here in the beginning of March of 2016. You know, when the New York Stock Exchange was getting ready to make a huge move is what I should say, to the upside out there. There was a reading here about 303 back in October of 2015 as well. Very interesting. But how about that New York Stock Exchange? How many of you are familiar with the Marty Zweig breadth thrust indicator? That is mighty impressive. This is Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Tim M writes in and asks if we could take a look at the EFA ETF. That's what's up on our screen right now. And you're taking a look at the daily, the weekly, and the monthly chart out here. And the horizontal lines, the ones that are red, cyan, and green, those are the top and bottom and center of their market profiles. Bottom is a support level. Top is resistance. Of course, if you're trading above resistance, old resistance becomes new support until a new profile forms out there. And what Tim is asking is if we could take a look at this. This is one of the few instruments available to him in his 401k for international exposure. And as he rightly points out, it's been a dog. He hasn't found a bottom out here yet. Now, the difficulty here, Tim, is that to really analyze this out there, what we'd really need to do is understand the holdings inside there and get a better feel for it. For example, inside of this ETF, here's your exposure around the globe. Well, it's not the total. If I expand it, we can see it. We can see all. But this is from a percentage weighting. You're looking at Japan. Now, I don't know which equities are in there that represent Japan, but equities that are traded on the Nikkei or within Japan are 24% of the weighting. The UK 17%, France 11%, Germany 9% out there. Switzerland about 9%, Australia 7%, Hong Kong 3%. So biggest exposures percentage-wise: Japan, UK, and France, and Germany. Now, you're asking, has it found a bottom out there? Boy, I'd say you really need to go focus on those countries and say to yourself, have they really found a bottom out there? I really think you've got to do that. And I don't know the answer to that just yet. If we just take a look at this chart and we ignored the facts, But you and I, we're like Joe Friday. We just want the facts, ma'am. And so we don't ignore the facts. But if we did ignore the facts, this is what this would say. Hey, you got a nice little V bottom going out here on the daily time frame chart. You're above resistance. That's old support, 58.81. If we take a look at the weekly chart out here, you can see it's trading with inside a brand new profile that formed today. This would say the price should target 61.66. Bottom is 57.47. The top, which is resistance now, 63.75. And on a monthly time frame profiles, it's well below those profiles. No bullish reversal signal. Really no bullish reversal signal on the weekly time frame, because all that this is doing is trading with inside the week of December 17th out there. So it's a bit risky, but yeah, it's priced above Stevie's red line. So Stevie's red line, I'll give you that out here, is 58.39. I can say that personally, other than a counter trend rally out here, you really want to stick your money right now into the UK and into France. The UK with Brexit, maybe you do. The France with regard to all the Yellow Jackets out there. I'd say Yellow Jackets because it's a great jazz band, although they've, there have been players going in and out of the band for years out there. But I mean the yellow vest, and then you've got Germany, Merkel. I don't know. Tim, yeah, I think we got to look elsewhere. But you've got the levels out here, support and resistance, and then you've got to be paying attention probably to the U.S. dollar index as well. So short term, yeah, maybe. Long term, I wouldn't get married to the ticker symbol EFA. I just wouldn't do it. But you might be different. Now, earlier, and this is kind of interesting with regard to the U.S. markets out here, we talked about the strength of the market breadth out there, right? We took a look, when we went to that break, we took a look at the advanced decline oscillator. This is for the New York Stock Exchange, trading out at 307 right now. Listen, above plus 150, we're now twice that level. Above plus 150 on a closing base. Now, this is not a closing base today just yet, but above plus 150, I think I said that 3 times now, is big breadth to the upside. Big, especially from where we came from, which was down to the minus 360 type level out there. But that's the interesting thing. In fact, if we take a look at Marty Zweig, may he rest in peace, but he created some fairly cool indicators out there. He's got the 4% rule, but one of the ones that he did many years ago, he started taking a look at the advanced decline data. He created a ratio. We like ratios out there. And then what he did was he took that ratio and he went ahead and he used some of Peter Harlan's work, and he took that advanced decline ratio and he applied the 10-day exponential moving average to that. Now, all of that math, Stevie's son, has to do it by hand in order to be able to create that data. I got to take data from one system, put it in a spreadsheet, churn it up a little bit, apply the exponential moving average to then create that Zweig breadth thrust indicator. I can only say it once. If I try to say it 3 times, I get it all messed up out there. But here's the deal. Now, first, before we came on the air, that was at about a 0.64 reading. And you'll see I've got blue lines or blue arrows, red arrows when we have other readings up at these levels. You don't get it that often, although we've had it a decent number of times since the 2009 bottom out here. So to say we don't get it that often, well, we haven't had it at above this level here since about July of 2016. Yeah. Now, what this does is it bodes well for the future. It doesn't tell you what's going to happen tomorrow or the next day out there, but it does need, you got to say, something to think about. Now, the way that this works is the way that Marty Zweig's breadth thrust indicator system worked. It required that ratio to get down below. He must have been friends with Leonardo Fibonacci. It required that ratio to get down below 0.382. Maybe it was 0.38, but I like 0.382 out there. That's the blue line at the bottom of my chart. And then within 10 trading sessions, and let me go count them up right now because I think we're only in trading session number. So since that, the low was made here. What was that? That was on 1554. That was December 24th. Yeah, of course. Hello. Knock, knock, anybody home? Now, we are only in day, let's see, that's 1, 2, 3, 4, 5, 6, 7, 8. 8 trading sessions. Now, I don't know how it's going to close. Market breadth is going to close. So this is a manual calculation. This was as of maybe about 12:30 or so. But if we did manage to close right around here, you're going to get that signal. All these blue arrows, by the way, are not that signal. Because I have to manually go back. I tried to find my old spreadsheet, my old chart out there. I couldn't find it. So I've got to go back and see how many of these took place within a 10-day, because that's the requirement. And when I say, what I mean by that is that you went from below a 0.380 or 0.382 to above a 0.61. Of course, I like to use 0.618, and that's the blue line out there. But these have been, now not every single, there still is no indicator out there that works 100% of the time. But you don't want to ignore this. So this really bodes well. I'll just take the longer term picture out there for the longer haul. In other words, if you are of the frame of mind that the market topped, that the Dow topped in October, if that's your frame of mind out there, I think you ought to change your frame of mind, especially if Marty Zweig's breadth thrust indicator closes where it does today, tomorrow, or the next day. We're only in day 8. Steve Rhodes with TFNN. We'll be right back. The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 2 1/4. S&P's up 32. Light sweet crude trade out at 49.17. It's up $1.19. Brent writes in and wants to take a look at light sweet crude and wants to look at the profiles out here. If we look at the profiles, one of the interesting things that we have happening, it appears today, and this is the daily time frame chart, is prices trading above resistance out here. Resistance being the top of that box. Now that level, Brent, is 48.86. We're trading at 49.14. Ideally, if you're looking for a breakout in light sweet crude, you would see it close above that today. Now, what happens if you don't see it close above that today? Well, then you know that resistance is held. That resistance level, by the way, was tested on Friday. So it's really important, not really where it's trading right now at 49.14, but where does it close? 48.86 is the key level that you're looking for. If you do see it close above that, then what price should do is target 52.15. That's where Stevie has the next level of resistance out here from its daily time frame. Now, what you will notice is we haven't seen a close above the top of the profile box out here since September of 2018. So closing above the top of that box today would certainly be short-term bullish. But Stevie would say, not so fast. The reason I'd say not so fast, even though it's not shown here, is that on the trading session of December 17th, that was day one of the Tom DeMark setup 9 count. And oftentimes that can be a level of resistance. So what you're watching for, and this would be a hidden level of resistance, this would be bullish move number 2, would be a close above 52.15. I'm not saying it's going to close above it. I'm saying that for managing the trade, if you're in the trade or if you're not in the trade and you're looking to get in the trade and you get it close today above the top of the box, your reward is only to 52.15 at this stage of the game. Doesn't mean you can't overtake it, but you have to realize that is where resistance is at. If you're in the trade, you need to understand that's where resistance is at on the daily time frame. It's not that they can't fail. It's just you want to understand where the enemy is. If you're long, the enemy would be sellers. Now, we use 52.15. That's the daily level. That's the beginning of that Tom DeMark setup. That is the Tom DeMark setup trend line that we will review tomorrow in the workshop that I've got for subscribers, and you can be a subscriber. Everybody can be a subscriber. Let's all subscribe to the newsletter, at least for 30 days. Unconditional money-back guarantee offer out there. It's a pretty good deal. But if we take a look at the weekly time frame, you also have resistance at 51.86. Now, that 51.86 is both the bottom and the center of its weekly profile. So that should be some really strong resistance. Again, if strong resistance fails, strong resistance would become strong support. So a close above 48.86, Brent. Steve-O says, watch 51.86 and spiking the ball at 52.15. If that contains price, that's the end of the counter trend move. If price can close above those levels, and then, boom, you're off to higher levels. Where are those higher levels? Wow. On a weekly time frame, 63 buckaroonies is the top of that profile out there. As far as any other tools, anything else that we're looking at, the other thing I would be watching for is this could be day 5. Now, this is the continuous contract. My apology, I don't have the February contract yet set up inside my NinjaTrader software, so I can't pull that out. I can't pull that rabbit out of the hat out there. But this does tell me that today is likely to be day 5 of a potential Tom DeMark setup 9 count out there. So I'd be watching that as we get to days 8 and 9 and those levels out there, those levels that we just took a look at. So I hope that helps you out, Brent, and a congrats on that trade out there. That was a beauty. I'm referring to Celgene out there. So that was a beauty. Congrats on that. Other questions? Let's see. Is there anything else? There's nothing else here on the email scheme. Inside the den. There we go. Inside the den, we've got really 2 questions. One primary question here is, where does the 30-year Treasury decline start breaking support? Excellent question out there. Now, how do you like that? How do you like that? The timer of the year in 2018 for bonds and the S&P 500. You got to love it. So, Mr. Z, on Friday, we went to neutral when we were taking a look at the 30-year Treasury bond, what you're looking at out here. You might ask the reason, why did we do that? And we did that primarily because we were in that seventh wave move out there, letter number G. And in this case here, what price did on Friday, I was not near any screen at any point in time, not really until late last night. And if we take a look at what the 30-year Treasury did, was it came back and it found support at Stevie's red line. And right now, price is trading below that level. Now, there's a brand new daily profile that formed. I'm going to go ahead and put up my other screen out here because I'm going to answer that question. It's easier to go ahead and grab these levels. I want to give me uno momento, por favor. Let's do this. Let's do this. Let's do this. What are we going to do out here? Here's what we're going to do. We're going to open up the file that's dedicated to the 30-year out here because I want to be able to give to you multiple time frames because I know you trade this instrument out here. So let's give you the best possible information that we can. And in doing so, we're going to take a look at, I believe it's a 60-minute, it's a 30, a 60, a 120, a 5-hour, and a daily. This is the daily double that you just hit out there. So first, with regard to the daily time frame, you can see that the top of that box is 146 and 5/30 seconds. That becomes your first level support. Now, this is the interesting thing about the 30-year Treasury. We got the bearish reversal signal, key reversal day at wave number 7. We did that on Friday. We're not going to make a higher high today. It doesn't appear we are. So that's confirmed. That's cemented. We know price came back, tested Stevie's red line, trading just slightly below it as we speak right now. I don't know where it finishes the day. But even if that level of support breaks, which would be support level 1, support 2 is just below that. When price a new profile forms and it's below price, it says there's a strong move going on. And that's why Stevie is still neutral, because I was scratching my head or hitting my head against my hand or sometimes the wall because I don't know which way to go on this. I know we've got a reversal pattern in play out here, but also know we've got a bullish message here with regard to that daily profile. This means you're swimming with the sharks out there. And I don't want you to swim with the sharks necessarily. Watch 146.05. If price gets below that, then you may find support at 145 and 23/30 seconds. Below that, then you're looking at 144. Okay, that's what that shows. If we look at the 5-hour time frame chart, that says you've got support at 146 and 9/30 seconds out there. You're below the bottom of the 2-hour chart. You're below the bottom of the box on the 60-minute. You're below the bottom of the box on the 30-minute. If you're looking to trade some type of counter trend move to the upside, you'd probably be looking at 146 and 23/30 seconds out there. So you've got reversals in place, or you did on Friday, but you haven't really seen any key levels of support broken other than Stevie's red line. So I hope that helps you out with regard to what Stevie's looking at. We take a look at the 30-year Treasury. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. We've got a request from the Tiger's Den. Top Dog wants to take a look at Walmart. And the question is short, intermediate term price projections out here. So we take a look at Walmart. What we have out here is the daily, weekly, again, in the monthly charts. We've got their profiles out here. And so here's one of the things that we know, Top Dog, is that price on a daily basis a few days ago closed above the top of its box. The top of the box out there is a level of resistance. That was at $93 even Steven. You're at $94.97. So on a daily basis out there, short term, that becomes support. Old resistance, new support. We switch over, take a look at the weekly set of charts out here. We know that price is gunning for, or should be gunning for, the top of its box. That's $96 even Steven. When it comes to the monthly time frame chart out here, it's really just been consolidating, hashing around between the 108 level and about 83, 84 in that range out here. Price above the top of its box. So the daily and the monthly is trading above resistance, and the weekly headed to resistance. So if you're looking for price projections, that's one level. In the case of the daily time frame, it's so easy to see. Price completed an A to B equals CD pattern. That was in a move that went from May of 2018, May 24th, down to the 81 level all the way up to 106. So this is a Gartley buy pattern that formed out here when it completed that bullish engulfing, when it completed the A to B equals CD pattern, and it generated that bull sash candle out here. That was on the trade day of December the 26th. Now all Gartley buy patterns, and mostly all of them, have 5 different potential outcomes. Those 5 outcomes, the first 4 of them, or the first 3 of them, I should say, are retracement levels. The 4th is certainly retracement, but the first level, which price is above, is the 0.382 retracement, and that happens to be the dead cat bounce. Now, a top dog probably likes a dead cat bounce out there, and that was 93.61. So this would say that level number 2 becomes the next price target area, the 0.618 retracement. Very similar to what Mr. Z, John, wrote inside the Tiger's Den, asking, hey, the retracement inside the ES is right at the 0.618 retracement between 2 sets of swing points. Is that important? Well, it probably is important. He would tell you right now, this might be important with regard to Walmart. Get up to 98.42. But that becomes, on a daily basis, price target number 2. Now, at 96 bucks even, Steven, that's how you'll know whether price is going to be able to go get that 0.618. Because there's a hidden level of resistance, brand new profile, formed this week, 96 bucks. Top dog, if price is able to get above that, then level number 2 of that Gartley buy pattern will be in play. What's level number 3? I'm glad you asked, because it's that 0.786 retracement level. That's at 101.85, and above that is that 100% move of a move that gets you all the way back to its highs in the 106.21. Number 5 would become the A to B equals CD to the upside. We won't go measure that because it would be a doozy. Okay, you asked me to measure it. Let's go measure that. Let's actually draw the A to B equals CD pattern here on the weekly set of charts. And this would be long-term out here, but this will take you back to the highs or beyond that. The A point, in essence, is going to be down here. It looks like it's right around the May 18th level. That's your A point. Your B point out here the week of November 12th. Your C point may have been that December 24th level. Just get you back to its all-time highs out there. Right back to it. And that would be from the January 29th level in the 109.98 area. This says 110.21. And you just watch the volume as price is moving in there. But you've got to take this thing one step at a time. So in summary, you're above the 0.382 retracement. You're above the daily profile. 96 bucks is next. After that, if that gets taken out, then you're on your way to 98.42. And above that would be 101.85. Top dog, I hope that helps you out with regard to what the Walmart is doing out there. We'll take a quick peek, see if anybody else has written in, because we like to get to all requests as best as we can. I don't see anything else out here. So what do we do for the next 4 minutes? And then we've got another 2-minute segment out there. I want to give you valuable information out here. So how do we do that? Let's take a look at the spot volatility index. So the spot volatility index today, this morning, was retesting its 50-day exponential moving average out there. That's 22.41. We're below it today. We're at 21.19. If it closes below that, this says that the spot volatility index should, doesn't mean it will, should, probably will, go target 1833. If it heads to 1833, well, then that's pretty good for the ES Mini. I guess that goes back to the question that John asked inside the Tigers Den, is where the ES Mini traded to, is that an important level? Well, he wouldn't have asked the question if it wasn't an important level out there. And it's an important level or area. I'll just use general area, the vicinity of it, for a couple of reasons. When I take a look at the ES, if you take a look at what I'll call a secondary resistance line out here, what I would also do, and is very close to that 0.68 retracement level, is just take the low from October 29th inside the ES Mini, attach it to the low of December 10th out there, and that's a price level that the ES Mini needs to close above to say, you know what, I'm going back towards at least the next horizontal trading range in the 2673, 2693 area, which happens to be the January highs. If we take a look at the Dow equity futures contract, in essence, we're using the same dates, October 29th, and we're using the low from December the 10th. And you'll see that price has not gotten above that. So as beautiful as the markets look right now, the move today, the market breadth that we've got out here, there are still some levels of resistance that really need to be dealt with. The question is price going to take that level out? And if it does, where is it headed to? Now, in the case of the ES Mini out here, let's do this. Let's go back. Let's go to kind of a cleanish chart out here, if we can. Yeah, this is relative. What did I thought I almost deleted that. Phew, woo, glad I didn't do that. Let's turn off the volume, because on this chart, that volume is not something we're going to utilize, but we can draw an A to B equals CD to the upside. Let's say these levels of resistance, that 0.618 retracement level that you're looking at, and I didn't look at your dates out there, but if I'm looking at a daily time frame chart, which may be different. On the daily time frame chart, this is what Stevie's eyes see. Stevie's eyes see, without a doubt, a significant low on December 26. I see a move up. The move up, it looks like the high out here on December 28th, and that was at 25.23. That becomes your B point of an A to B equals CD to the upside. That B point was passed with wide price spread and accelerated volume, and it did that on Friday. That generated that C point of the A to B equals C to the upside. I would ask this question. I recognize there's a hurdle to climb. In the short-term time frame, we've taken a look at some different levels of resistance out here. But, I say but it looks like what the ES Mini wants to do out here is make a move to that 1-to-1 level. That's at 2644. And maybe it's 2700. Now, what's interesting about that is if we take a look at a retracement here, since we were talking about retracements, we ought to go look at one. If we start from the swing point that began December 3rd, that was the little bugger that started it all the way down here to the low on December the 26th, well, it looks like the 0.618 retracement maybe is where price is headed to. Stevie's got it at 2627. That could be, should be, might be a Gartley sell pattern. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. You got the Dow up 147. The S&P's up 24 points out there. So, just to summarize where we're at, we're in, just as we were in extreme oversold condition, we're really in an extreme overbought condition as we take a look at the advanced decline data out here. It's a condition that if we go back into the early 90s, we don't see that often. Most of those times, what it has eventually led to, the majority of those times, it eventually led to higher price. It doesn't mean that it happens tomorrow or the next day out there. It just doesn't. I'm not saying that it's not going to, but so we're in. So just be careful out here. Remember, we were just looking at the ES Mini. We could have looked at the S&P 500. Maybe we should do that for everyone out here just so we can take a look at those levels, because really you've got the same kind of pattern that is in play in A to B equals CD, or potential A to B equals CD, which really just sets up a Gartley sell pattern, or could set up a Gartley sell pattern. So here's your A to B equals CD. That takes you up into the 26.17. That would become your 1-to-1. 1-to-1.272 is 26.64 out there. And that gets you into that 0.618 retracement of the larger move from December 3rd down to the low out there on December the 26th, a 0.618 level, right around 26.26. That would be the real sneaky place for the bears to be lined up on more of an intermediate term basis out here. But we'll just take things one step at a time. Speaking of one step at a time, if you haven't tried Mastering Probability, now is the time to do it. We're holding a live workshop tomorrow, 5 to 6 p.m. If you can't be there, that's okay, because of the tools here at TFNN.com. You'll have an extraordinary workshop amongst the other couple that are also on your members page. But tomorrow, we'll focus on the Tom DeMark setup 9-count, the McClellan oscillator. We're just taking a look at that, how to calculate it, all the meaning behind that, and I'd like to be able to teach you those tools, the exact tools that I used that allowed me to become the timer of the year in 2018 for the S&P 500 and for bonds. I'm in good company because Tom was the one that taught me. He was the inspirer of this whole thing. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear's up next. I'll be back with you on Terrific Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.